Thanks, Madhuri. Of course, there are some very interesting sessions going on during the day, so I hope everyone is enjoying those sessions. I'm actually quite excited about this session as well. So, what I'm going to do, I'm going to ask my panelists here to spend a minute or so to introduce themselves and also briefly talk about your businesses, what you guys are doing, and then we'll get into the discussions.
Great. So I guess I'll start. Hi, guys.
Yeah, Bhuvan, you can start.
Yeah. So hi, guys. Hi, everyone. My name is Bhuvan Rustagi. I'm one of the co-founders and COO of Lendbox. We are basically, I'll keep it short, we are a wealth tech platform focusing on P2P and debt-based investments. We are a pan-India operation. And given the we've been in operation since November 2015. We became part of the IvyCap family in 2018 onwards, and it's been quite a great ride. And I think what we're focusing on is basically democratizing non-equity or non-public market linked investments. And as I said, we are currently focused on debt, but eventually we plan to move on to other asset classes as well. Thanks.
Great. Thanks, Bhuvan. Pratyush, you can go next.
Thanks, Vikram. Hi, everyone. I am Pratyush Alan. I'm co-founder at Fingpay. We are a fintech company and we are enabling digital banking and financial services for the last mile. We are serving the underserved and unserved customers with their banking needs and digital payment needs and different financial services in small sizes and shape. We have almost 1 million merchant network across India today, and we process more than 30,000 crores worth of transactions at these places where they are assisting the rural customers for digital payments and for banking services. And soon we are also launching our own self-banking application on the Neo front for these customer segment, where those are tech-savvy customers. Now they can not do just assisted banking, but also self-banking on the application.
Great. Thanks, Pratyush. Sanjeev?
Yeah, thanks, Vikram. Hi, I'm Sanjeev Chandak, co-founder of FT Cash. We are building a merchant-focused neobank. So our target customers are local mom and pop retailers spread across the country who currently do not have access to credit and hence they can't grow or they can't scale up. They don't have access to institutional credit, to be precise. So we basically enable credit or provide working capital loans to this target segment, along with digital payment acceptance, and we'll be building the insurance vertical soon as well.
Great, thank you so much for your introductions, gentlemen. This is quite interesting. Fintech as a sector has come a long way, I would say, in the last several years. Especially since demonetization happened and things have changed quite substantially, even ever since COVID has started. And each of you have very different business models targeting different customer segments. I would love to hear your thoughts on how these major events that have happened in the past have impacted the industry as a whole and your business specifically, how are you seeing this, impacting going forward as well? So if you can just go through that, maybe Bhuvan, you can start, and then I'll come back to the others.
Yeah. So obviously, fintech overall faced a massive change. I think after demonetization, where fintech there was a digital push. Maybe COVID as a pandemic across the globe was a massive push for digitization in that aspect. So overall, I would say the entire industry has gotten a boost. However, the debt-based products did take a hit as well, especially those the products which were serving the very underserved or the absolute bottom of the pyramid, like let's say gig economy workers and so on, who didn't have much of a history or whose incomes were reliant on sort of daily wages or daily transactions. But I would say overall, when it comes to payment systems, or the pandemic actually pushed for innovation within the fintech space, definitely. And it also pushed more people into on the investment side. Unfortunately, we always end up talking about the debt, the lending side of the fintech space. But even on the investment side, as we know, the stock market investors increased by 1 million users during the pandemic, and more people are now sitting at home and trying to understand how they can invest their money better. In our case, for example, on the product or the borrower side, we were able to serve merchants who were facing cash crunches because of the pandemic, and we were able to identify opportunities there where we were also able to serve them, served an underserved product base, and also get good returns for our investors. On the other hand, we had a lot of investors due to the volatility in the stock market. We had a lot of people come on board because they wanted more fixed income products. So our business definitely got a massive boost overall when it comes during the pandemic. And obviously, the key thing was, which remains across fintech, is to make sure that the risk is managed very properly, and there needs to be a very high focus on risk, and to make sure that the products which are being served to your customers, either on the borrower side or on the investor side, are of extremely high quality.
Sure. No, thanks. Thanks for that. Pratyush, how about your side?
I think same with like what Bhuvan said. So we also got a good boost in the business, and thanks to both the things, because where I think to add to the Bhuvan points, basically the digital adoption for customers in terms of smartphones and banking applications and the practice of making a savings into a bank account. So demonetization taught them a lot to deposit amounts and then pay digitally, because cash was scarce. And then later, the COVID taught them again that cash is risky and it can carry the viruses, etc. So they started again moving towards the digital options. So I think all these things helped these people to start adopting to it. I think the people are very smart. अगर कुछ करने पे आती है तो people do it, but जब तक मजबूरी नहीं आती, जब तक लोग नहीं करते हैं. So when I visit these places, they all know how to use WhatsApp and send videos and chat and do TikTok, etc. But they didn't want to do banking and digital finance and all these things. But now I think with that push, once they experienced, many are stuck with it and continue to do it. There are a lot of people now who just pay using UPI, etc. Even when I take an auto rickshaw somewhere and I don't have much cash, he says, "Sir, UPI kar do." And so I think that's a good push. And for us, the volumes and like business-wise, it has increased a lot. Our revenues and even the profits have grown multifold because of it. So, and I think overall also it has been helpful for everyone and not only just for us. So.
Sure. Yeah, Sanjeev, and in your case, of course, you've been lending through your platform to quite a few offline merchants, right? So how's been your experience with all these changes which are happening and which have happened in the past?
Yeah, so I think there were two parts to it, right? So as Bhuvan and Pratyush said, on the digitization front, right? So now people are getting more used to being digital, right? Because they were kind of forced, right? So I think that is a very big positive for the long term, right? That the operational processes, etc., will be more digital going forward, or are already becoming digital, and customers are accepting it. So the change management has happened very, very fast in this space. On the credit side, obviously, right, I mean, with a big impact on the offline merchants, we have seen higher credit expenses as expected, because a lot of stores, etc., were closed due to the government regulations, etc. So we have seen that. But what we have also seen, and which is very interesting, is that it took us as a lender, it took us through a stress event, right? Hopefully once in a lifetime type of stress event, and we were able to showcase that our business model holds good, our unit economics holds good even in a stress event, right? So that will be very, very reassuring as we scale up. So I think that was a big positive. The second piece is that a lot of the people who were on the edge, right, from a customer segment perspective are wiped out, right? So they are no longer in business, etc. So whoever remains is stronger. And as the COVID kind of dies down, they would be, looking to scale up, looking to add more more market share in their micro neighborhoods, etc. And then business should also be, very, very positive going forward.
Got it. One of the biggest challenges, I would say, in the fintech industry has been the evolving regulatory guidelines. And many times, startups have been struggling, to cope with those changes, and also whether it is to do with the RBI guidelines or guidelines specific to NBFC or guidelines with respect to what SEBI is doing. So there are lots of things which are happening, and they're very dynamic. And I think in each of your businesses, they impact very differently. So we'd love to hear from each one of you, starting with you, Bhuvan.
Yeah.
How are these regulatory guidelines impacting your business?
So, I mean, obviously, firsthand, and I think Sanjeev would also know, we are both, we have NBFCs on board, and we also are kind of RBI registered NBFC. We are an NBFC P2P. So yes, the regulation is part and parcel of the lending business in India. I do think that, yes, to some level, the regulations are a bit conservative, where as an industry player, obviously, we would want it to be a free market. It should be open to innovation. You should be allowed to do whatever you want to do, and your users should also you should also assume that your users are educated enough to come on board and let them, and then face whatever they do, right? I mean, and even our regulation, for example, which is specific to us from RBI perspective, they are telling we are not allowed to take any credit risk as a normal NBFC. So right now, even now, our users are taking on the credit risk. Unfortunately, with COVID, there is a lot of lobbying which we want to do, where we want to increase changes, but right now the RBI is so preoccupied with other things that they're not able to focus on our regulation. And the last thing is that when it comes to startups, we are much more fast-paced, and the regulations usually are not allowed to catch up. When it comes to, and especially in the fintech space, most regulation is always catching up. It's always reactive. For example, in our case, we were in operations 3 years before the regulation came in. We started in 2015. The regulation came out late 2017. So basically 2018. So it's mostly reactive, and then obviously we have to keep pushing for it, lobbying for it. That is one thing, obviously, which is I would say the con of regulation, but there is a pro as well, where it creates a sort of level playing field across different startups, that everyone starts from the same base and has to innovate within that box, so to speak. However, we being I would say the Indians or the Jugadu sort of people we end up finding more and more innovative ways to expand our product lines and so on, and make sure that we are able to serve our customers in the best possible way. In our case, our investors, our best possible way. Yeah, but obviously, when it comes to regulation, I would, as a industry player, I would want them to be much more dynamic and conservative. But in our case, they haven't moved a lot in the last 2 years, which we really would want.
Got it. Pratyush, what's happening in your case?
I think I am happy with whatever regulations are there in our space. Okay, and I think our regulator and NPCI and all are moving so fast. It's like they are also moving like a startup with every time they are bringing up new products, and we have seen the adoption of UPI, the adoption of FASTag, the different adoptions of all these products across India, and the other developed countries are now trying to catch up and trying to implement systems like this. And plus, not only regulator is doing in a way that they are just doing it with one entity, but they are opening it for multiple players to join in. Like for a BBPS kind of setup, they had BBPOU, and you can become an agent institution and then sell your services across. So they have taken care that everybody gets a chance to participate into that. The banking correspondent guidelines are also flexible enough for multiple players to do and to innovate and and still do in a manner that it is still under compliance and there is no harm caused to any stakeholder. So till today, so I'm very happy about the way the things are moving with all these things. I am not sure about how it will happen. RBI has come with the new PA guidelines which we are applying, and then will be directly under RBI. For that, that's yet to explore. But I think if we are doing good and helping the society and in financial inclusion, I think the road will be much better compared to now. So yeah.
Got it. Sanjeev?
Yeah, so I think, no, as being in this industry, we have to live with the regulations, right? I mean, that is a given. And our business models, no, have to be agile, right? Because obviously, no, not everything will move in our favor all the time, right? So that is something we have to adjust to. Having said that, no, I think RBI, no, and even the government has done a phenomenal job in terms of, no, building customer confidence, right, in the financial products, right? Because I think we always like a free hand as no providers of service, but at the same time we have to also be cognizant of the fact that the consumers also have to come right, come and interact or transact. I mean, if I've seen multiple regulations all the way from OTP being mandatory at some point for digital transactions few years back to various regulations. So for example, if you've heard of there are a lot of Chinese apps that come on the Google Play Store giving loans at ridiculous rates and RBI clamping on them. So I think they have done a very, very good job in terms of increasing the consumer confidence, which is overall a very big positive for the industry. Because if the consumers come to play in this market, the rest of the things we can manage and we can tackle care of, we can take care of.
Actually, Vikram, I think for NBFCs, the regulations are quite tight, maybe because while we were also dealing with them for our merchant lending piece, they said they will do their own KYC again and re-KYC, etc. And multiple factors. For payments, they are a little broad. To just give you an example to everyone that the way for payments is supposed for an authentication of payment, they have given a very broad guideline that either of two things you need to have. So the three things which they have given options is who you are, what you know, and what you have. So now it can be a combination of a biometric and a password, a PIN and something. So multiple factors you can play, a mobile phone and a something. So you get that flexibility here that out of these three, you can choose any two. And any two also, there could be multiple options. So what you have could be a mobile phone, could be a debit card, could be anything. Who you are, maybe your iris or your fingerprint or your face. And what you know can be your password, your PIN, your Aadhaar number, etc. So I think the regulations are broad here, but in NBFCs they have got into very depth and minute, and that's why there is not enough room for them to play. But
yeah, just to add to Pratyush's point, actually, I mean the one thing which the NBFC regulations also add. I mean, what I would definitely prefer is that the regulation be applicable in a matrix sort of a stage by stage basis. That if you have assets by this much, then these rules apply to you, and if above this much, then these rules apply to you. On the tech side, on the IT side, those rules do exist, but other than that, all NBFC regulations apply to all NBFCs. And in our case, being a startup, we have to be extremely capital efficient, right? And we end up spending so much money on just being compliant with all the different regulations and paying external consultants for that I would rather spend that on growing my business and building more high quality products rather than paying consultants to make sure that I'm compliant to regulations, which I know are not really applicable to me. And also just overall like communication, and especially during COVID times, I would say in the last 2 years, given that we are also having the response from RBI, I mean, without their fault, it's nobody's fault that they were not in the office or working from home. But given that we had to follow some rules, the responses also ended up being extremely slow. And now, unfortunately, they have such a big backlog of from the past 2 years that in general, without any, like I said, without any fault of their own, everything is just slower. So if we were as startups, and because there is a Startup India program, right? So as a start, with it being startups, I would have liked that we be exempt from from doing certain things a certain way, and maybe have a little more wiggle room to grow till we reach a certain size.
One thing which is there across all three of you is that all three of you have grown quite substantially with very limited capital, right? So that's something which is very unique. But I think what I wanted to understand, given the sensitivities of information and data that you're handling and the technology
Yes.
platforms that you have, there is the challenge of making sure that, you're able to protect the privacy, security
Yes.
issues, especially, when you're handling individual level data.
Yes.
So how are you guys dealing with that, with the, while you're scaling up quite substantially, obviously exponential growth happening, but at the
Yes.
same time, you have to make sure that you keep pace with the volume of data that you guys are putting on your platform, and therefore the issues coming along with that.
So yeah, I can start on that as well. So RBI also has regulation around data security. One basic rule is that all your data has to be held within the country. You can't, even when we all use cloud servers. None of us have our own servers. So we use Amazon, and they have their servers in Bombay. Secondly, if we take Aadhaar, UIDAI has a rule that you have to mask the Aadhaar. Even our own staff members can't see the Aadhaar number, even if they want to verify. So it only has to be digitally verified through third parties. So we have to make sure that all of those rules are applied. And I completely agree that given the volume of data, especially in all three of, like with Pratyush's case, he's basically in a way a banking function. So he has a lot of financial data as well. In our case, we are assessing both investors and borrowers. We also have financial data. In FT Cash's basis as well, they have borrowers, CIBIL scores and everything. So I think data security remains an integral part of the fintech industry overall. The biggest leaks which we've seen happen have been credit card data leaks and so on and so forth. So in our case, for example, we have 3 people dedicated to just data security. Luckily, we are also using a very solid server system. AWS also has a very good security system. We have multi-level accesses to all our data requirements. There are no super users except maybe 1 or 2 people, which is basically the founders. So not everyone can access everything, even within our teams. Or people can only see the data which is relevant to their role. So these are the few steps we have to make sure, and we get a information systems audit done every 2 years, so to make sure that all the compliances and our data requirements are there, or if they can be improved or not.
Pratyush?
I think here what we are doing is RBI has a detailed this on payment systems, so the certifications, etc. So we are following all of them, and like your PCI adherence, etc. And all these things have been there since ages, and they have been quite revising time to time. So I think basis that gives a good sense of security on following all those guidelines. Like recently, while we are applying for this new license, the guidelines which RBI suggested to have, we already had all of them. So it was very simple for us to move forward. Second approach, what we do is we don't save unnecessary sensitive data. So what data passes through us, but it is not so necessary for us in the future, we don't save it at all. So that way we save ourselves more, that we don't have anything. If you try get into our systems, there is nothing as such. So there are just logs, and you cannot do anything with the logs. And I think and third, having a very strong technology team. So my co-founder, he is very good at security and all that piece. He has in fact few patents also. So that way we have been able to manage it quite well, and we continue to do so.
Sanjeev?
Yes, so I think we go through and we collect a lot of data which is very sensitive, but we go through PCI DSS certification every quarter, where we go through that process. This is pre RBI as well, because these are no more card industry, worldwide card industry certifications, right, where auditors come in and then do it. But having said that, since we were talking about RBI, right, so now RBI has come up with another rule that says that no, you cannot store the full card details, even if you are PCI DSS certified. So I think no, I think which may be a big positive, right? Because if nobody stores that data, no, then even if a leak happens, right, it is unusable, right? So some of these things are coming online, and obviously we'll comply to that. The deadline is the end of the year. We'll not comply to that, but I think we are definitely very careful about who has access to data. Everything is a cloud, as Bhuvan said, right? For most of us, very few people have access to it from that perspective.
So, Fintech has been a big darling of investors, especially in the early years to 2015, 16, 17. And I think there was a big shakeout when the COVID situation started. And of course, there are lots of now such businesses out there. What stands you out? I mean, what makes you the winner in the market, and what kind of will really make you build much larger businesses going forward? Bhuvan.
Yeah. So, I mean, in our case or in our industry, the way we view our business is basically to make sure that we give consistent and good returns to our customers, who are basically the investors in our case. In most peers, when most peers in our industry are focusing on, and unfortunately, since you mentioned COVID also, from last year to this year, some of our peers have actually had to shut shop or scale down. And the primary reason for that was because their focus was riskier and high risk and high return sort of investments and very risky debt products. In our case, we've always been of the point of view that that is not the industry we want to focus on. We want to make an investor focused platform and make sure that they get good and consistent returns. Even if it's 12 to 15%, it's fine, as an investor is very happy in India if he gets that return on a monthly basis, annualized, obviously. So that's what stands us out. We are one of the few. In fact, we have the largest bouquet of products when it comes to within the P2P debt space. We have the largest bouquet of products available to an Indian retail investor. We have 20 plus products. Most of our peers don't have maybe 3 or 4 or maybe 5 products. A lot of them, and in a lot of cases, we work with third parties who are also taking on some level of risk. So there is risk sharing element as well, where in most cases the risk is shared, risk is passed on completely to the users of the platform. In our case, there is some level of risk sharing as well with third parties. So yeah, I mean, that is what helps stand us out, and that is what will help us scale, to make sure that we keep fractionalizing such kind of products and find more and more innovative ways to finance the, I would not like to say underserved, because but yeah, I would like to say that the unbanked in a way, or people who don't have access to finance on the borrower side. And in India, I would also say there is a big underserved population on the investment side as well. People who don't have access to good investment products. And what we are focusing on is to make sure that we give access to more and more sophisticated and high quality investment products to the Indian retail investor. And that is what I feel will help us scale in the future.
I think we are running out of time, but Pratyush,
okay,
I'd love to hear from you as well very quickly on that.
I think 2 terms which I would want to say is already in the title of this panel: the scale and the underserved. And third is the speed. So I think these 3 things combined, I think any investor would love us. So the scale, underserved it itself in an entry barrier, difficult to reach, but once reached it's not easily replaceable. And your third is the speed which you get into it, that others, while they catch up, you are somewhere else. I think these are the 3 factors what we focus on.
Very interesting. Sanjeev?
So for our industry or our niche, right, demand is not a problem, right? There is no $300 billion worth of a credit gap, right? So what is extremely critical is the ability to assess and manage credit risk. If we solve that problem, demand will never be an issue, right? And what we have developed over the last few years is an industry-leading platform where we are able to manage credit risk better than our competition, both pre-COVID and during COVID. We have compared ourselves with other folks, and our platform is able to manage credit risk much better than the competition. So I think this is very unique, and will help us scale up pretty rapidly.
So I have 15 more seconds. I'll give you 5 more seconds each. And very
Sanjeev, maybe I have a question quickly for you, that with the account aggregator, this thing which is coming up, will that help you a lot in that credit scoring, etc.? What do you think?
So I think the account aggregator piece is going to make operational processes a lot more easier, right? Because you have data, etc., in one place. But I think what is important is what do you do with that information, right? I mean, how do you manage credit risk once you get the information? I think that is extremely important. I mean, today, all of our customers have bank accounts, and the bank that they have an account with is not able to give them a loan, which is really surprising. They may have an account for 5 years with the bank, but the bank will never touch them and give them a loan because they are not able to figure out how to give a loan to them and manage that. So I think that's how it's going to help us.
So my 15 seconds are reduced to 3 seconds. So 1 second each to you. How many unicorns in fintech in the next 100 unicorns in India? Bhuvan.
I would say at least 20.
Pratyush.
Out of 100 unicorns?
100 next 100 unicorns in India.
Next 100 unicorns out of...
How many fintech unicorns do you expect?
The
next 100
fintech? I think more than 50. So,
more than 50?
Yeah.
Okay, Sanjeev?
I would say around 25.
Wow. Okay. So I think I'm sorry I have run out of time. I know there are some questions coming up as well, but I'm going to skip those for the time being because I'll get killed if I continue to move on. Thank you so much, gentlemen. Really, it was a pleasure talking to each one of you.
Likewise, Vikram. Thanks a lot.
Thank you.
Thank you.
Thank you.